Welcome to this Tuesday edition of Inside India. I'm Sri Jegarajah. Here are your headlines. US Treasury Secretary Scott Bessent telling CNBC it's the quality of trade deals over the timing as the US looks to clamp down on buyers of Russian oil.
I would urge our European allies who have talked a big game to follow us if we implement these secondary tariffs.
JSW Steel posting a quarterly profit beat as steel demand held up, but the company flagging concerns of cheap steel imports. We will be hearing more from the company's CEO coming up in the programme. And India's market regulator confirms it has lifted trading restrictions on Jane Street and directed the stock exchanges to closely monitor the US company's trading activity. Welcome to the programme. Let's take a look at the Asian markets first of all, which did inherit record closes, mind you, for the Nasdaq and the S&P. But the markets in our region not quite running with that positivity. Nevertheless, tech did make a comeback in the US session. Google parent Alphabet up nearly 3% ahead of earnings. Investors also hoping potential trade deals will mitigate the impact of President Trump's global tariffs, and a big risk worth watching: uncertainty over Fed Chair Jerome Powell's future. Let's bring it back to the Indian markets, who will be joining us in about 45 minutes' time. GIFT Nifty futures are predicting an opening number in the region of 25,187. So we're looking at a lift of about 100 points. And it was interesting to note that we did have a strong session yesterday on Monday, where the Indian benchmarks did rise, led higher by the heavyweight banks, including HDFC and ICICI, but a decline in Reliance Industries did cap those gains yesterday. Dollar-rupee exchange rate at 86.224. Now, US Treasury Secretary Scott Bessent saying they are in no rush to do trade deals for the sake of it to meet the August the 1st deadline. In an interview with CNBC, he said if tariffs were to boomerang back to higher rates on August the 1st, it could pressure countries to return to the table with better agreements. He also expects talks with China soon and raise the issue of clamping down on Russian oil, of which China and India are major buyers.
Any country who buys sanctioned Russian oil is going to be subject to up to 100% secondary tariffs. So now the United States Senate agrees with President Trump that tariffs are a means to political ends. And this is revolutionary. President Trump has changed the conversation here. And I would urge our European allies who have talked a big game to follow us if we implement these secondary tariffs.
Means to an end, quoting Niccolo Machiavelli there, which says something. According to CNBC TV18 sources, a US-India trade deal is not expected by the August the 1st deadline, as negotiations have hit a roadblock with agriculture and dairy the major hold-ups. President Trump reportedly offered India a deal similar to what it signed with Indonesia and Vietnam, but the Indian government decided not to pursue further talks this month. US delegation is expected in India next month with hopes for a deal by September or October. Treasury Secretary Bessent also spoke about the Federal Reserve and President Trump's increasing pressure on Fed Chair Jay Powell to cut rates. Bessent has been floated as a possible successor to Powell. He also reportedly urged President Trump not to fire Powell, according to the Wall Street Journal. Bessent dismissed any part he had to play in the president's decision, but offered his own criticism of the Fed.
I think that what we need to do is examine the entire Federal Reserve institution and whether they have been successful. I think that we should think, has the organization succeeded in its mission? You know, if this were the FAA and we were having this many mistakes, we would go back and look at why has this happened?
Now, India's market regulator SEBI confirming Jane Street has been allowed to trade in the Indian markets after it made a required $567 million deposit until the investigation is complete. SEBI barred the US trading company from trading securities, alleging manipulative trading strategies. The National Stock Exchange and the Bombay Stock Exchange have been directed to monitor the US firm's trading activity. And India's monsoon parliament session resumes today. The opening day saw a stormy session with the opposition calling for discussion of Operation Sindoor undertaken in the wake of the Pahalgam terror attacks. It also saw Vice President Jagdeep Dhankar resigning, citing medical reasons. A major part of this week's long parliament session will also tackle business conditions in India. In particular, the Jan Vishwas bill is aimed at aligning the country's regulatory framework with global standards, making it easier for doing business in the country. While the Mines and Minerals Amendment Bill will look into speeding up the leasing process and attracting private players to mine and explore critical minerals. And US retail giant Costco reportedly planning to open its first tech center in Hyderabad. The Global Capability Center will handle tech and research ops, initially employing 1,000 people and potentially more in the future. Global companies such as McDonald's, Heineken and Vanguard Group already have their global capability centers in Hyderabad. Walmart, Target and JP Morgan have theirs in Bengaluru. There's been no comment yet from Costco. Let's bring in the economic challenges and how this government is addressing them and the overall outlook for India at this stage of the cycle. Rajneesh Gupta joins us now, partner economic policy at EY India. Rajneesh, welcome to the programme. First of all, in your opinion, what are the most pressing economic reforms this administration needs to enact?
Yeah, pleasure to be over here with you on the program, and morning to all your viewers. I think as far as the government of India is concerned, really it is about growing the share of manufacturing within the Indian economy. That's one of the big end goals which are there. Now, to be able to get to the end goal, there are several strategies which are being pushed by the government of India. So one is the push basically which is there towards the ease of doing business in India, to make it easier for businesses to be able to operate. So what you're seeing in terms of Jan Vishwas, in terms of taxation laws and income tax, all goes towards that aim of making it easier for businesses to operate. Now, a lot of the issues basically which are there in India are also state level issues which relate to things like land, they relate to labor, to environmental approvals, to construction permits. And so what the government has done, it's set up a regulatory commission. And then I think behind the scenes, the government is working on identifying what are some of the roadblocks which are there in each of the areas, and really working with each of the states to be able to bring about these reforms so that it makes it much easier for businesses to operate. I think another agenda which is there is to reduce the cost of doing business in India, which really relates to there should be adequate labor which is available. There needs to be enough land which is available. Some reforms on the labor side so that there is flexibility which is there to bring down the logistics costs. So I think that is the second area that the government's working on. The third is, of course, if the manufacturing is to grow, you require market access to the industrialized economies, which are the large markets. And that is where in the UK deal, which happened, and the India-US and the India-EU deal are so important for India. And lastly, what I'll say is that, for the manufacturing really to take off, the other things which really need to happen is more, for you to de-risk your supply chains and therefore focus on mining, on the critical minerals, and also to get the R&D ecosystem going in India, so that if there are any technologies or anything which are there which are very difficult to get hold of, then there is enough research which is happening at a domestic level to be able to
Yes.
walk that path. So I'll
Rajneesh, you
stop
just
over here.
thank you for that. And you just enumerated a formidable to-do list for the Modi government. Does this somewhat inauspicious start of day one in the monsoon session of Parliament suggest that the Modi reform agenda, as challenging as it is going to be mired in this type of inertia and this type of political chaos?
I would be more optimistic than that. I think these reforms are really important, and the government recognizes the importance of these reforms, and that's why they are working. Now, India is a democracy, and like in any democracy which is there around the world, there's a lot of noise, and there is some work that the opposition needs to do in terms of raising issues and concerns and all. They're supposed to be a watchdog. But I would say that the government's very, very serious as far as this economic agenda is concerned. And the recent spate of announcements which were there, which were around the schemes on related to employment, or it was, how to get the ITIs going, or the 1 lakh crore fund which was announced for R&D, they are all pointers to a government's seriousness on pushing the reforms agenda which is there. So I won't read too much into the first day of the monsoon session, and I believe that the agenda will be pushed through.
Rajneesh, ease of doing business, that crops up as a perennial challenge, doesn't it, for foreign investors in particular. Now that there is a US-India trade deal possibly in the making, do you feel that there is greater urgency to get Jan Vishwas 2.0 done?
Yeah, I agree with you. So one of the things which is going to happen as India signs all these trade deals is that the tariffs will come down, and the Indian businesses will be subjected to a higher level of competition than what has been there in the past. So I think it's very important that the competitiveness of the economy and the businesses go up. And to that extent, if there are any impediments which are coming, from the ease of doing business, which we talked about a little earlier, then they need to be impeded. I'd make two more points. One is that making economies more competitive and deregulation is not just an Indian theme, it's also a global theme. And even in the US, there's a talk about how to make manufacturing more competitive. And the other point that I want to add is that ease of doing business is not just an issue for foreign investors, it's equally for domestic investors.
Yes.
It's to do with making the economy more competitive, and if the government can get it right, it'll be, favorable for private capital in general, whether domestic or foreign.
Rajneesh, the government has lined up 15 bills under this session. The highlight will be the introduction of the income tax bill 2025, and it ought to shake up. And it's a much-needed shake-up and overhaul, isn't it, of the near 60-year income tax laws in India. What then could it mean? Have you got a line of sight on what this could mean for Indian taxpayers, government revenue, and the overall fiscal position?
Yep. So as far as the taxpayers are concerned, the real intent is actually to make it easier, to bring down the number of disputes which are happening, and really to make the law to be as clear as possible, which is there, for it not to be ambiguous and for it not to be misinterpreted by different parties which are involved. So it's really, so from a taxpayer's perspective, the real intent is to make it easier and not to have disputes and not to get any of the negative headlines which we see from time to time coming over here. Now, as far as the fiscal side is concerned, generally I'd say that the government's been doing quite well. The fiscal deficit has been coming down, and the tax revenues have been going up. So, for example, though you refer to income tax, but the GST revenues have been up about 11 or 12%. And in the last few years, we have seen personal income tax rising much faster than the corporate income tax. And in this fiscal year, only 3 months have passed. So it is very early to be able to make a comment. And so this change is really not to drive up the tax rates or to get higher revenue going, but it's really, of course, to tighten compliance, make it easier for businesses to be able to operate. And it's in that sense, in that spirit, that we are looking at this bill.
GST, Rajneesh, is also poised for a major overhaul. What can we expect?
So look, there are two aspects which are there. One is again is on the ease of doing business, which is there are issues around audits which happen under the GST, and it's really to make that process simpler, to have lesser registrations. So one is the ease of doing business aspects which are there procedurally, how it works to make it easier, and to have lesser number of disputes, and to set up dispute resolution entities. The second, there has been a talk around the rationalization of rates, which is there. Unfortunately, there is not too much of information which is out in the public domain. My own guess is that the government's been working on it behind the scenes. And as you said, one of the other requirements is the fiscal discipline, which is there to be able to maintain the revenues. So I think those are the two considerations which are going to be there as government starts looking at rationalizing the rates. But there is no very clear indication as to what will happen. So there's a general talk that instead of 4, we may have 3 rates. But I'd wait a little while before making a strong comment.
Rajneesh, I'm so glad that you mentioned the fiscal discipline aspect of the policy focus. And do you feel that the target of 4.4% fiscal deficit for 25-26 fiscal year is still intact? What was very visible was how Operation Sindoor is overshadowing everything, it seems, and higher defence spending. Yes, it is enshrined in India's budget, but do you think or do you fear that this could disrupt, higher defence spending, that is, could disrupt the fiscal discipline narrative and put those targets at risk?
So that's not a sense which we have. So if you look at the record of the government over the last 4 or 5 years, so whatever it has promised in terms of the fiscal deficit targets that it will meet, it's actually gone and met and achieved those. And what it's really done is it's not really increased the revenue expenditure. They have controlled the general spending quite tightly, put the money on the capital side, and met the fiscal deficit targets. Yes, Operation Sindoor has been there, and there's a lot of talk about that. But that's not a sense that I'm getting sitting over here, that because of Operation Sindoor and whatever defense spending needs to be done, we are going to breach the fiscal deficit targets. And we are certainly in India in a very different position, say, from where Europe is, where the general defense spending has been low. So over here, there's been a lot of focus on indigenization and buying whatever defense equipment is required on defense readiness and all. So I don't get that sense. I don't perceive that risk from where I'm sitting.
Access to Russian oil and the impact that could have on the public purse is a issue moving forward. Rajneesh, we're going to leave it there. Thank you very much indeed for joining us with your commentary on India's macroeconomic outlook and the fiscal position as well. Rajneesh Gupta there of EY India. Coming up in the programme, India's earnings season in full swing. JSW Steel beating estimates for quarterly profit as steel demand held up, but cheap imports are a concern for the company. We'll be speaking to the company's chief, Jayant Acharya, later on in the programme. We're back in 2 minutes. Welcome back to Inside India. More political uncertainty in Japan as the country's embattled leader Shigeru Ishiba vows to stay on even after his ruling coalition lost upper house elections over the weekend. But there's a small party that showed momentum. Lin joins us now. And Lin, arguably the election's biggest winner.
Yeah, indeed. So this is the Sanseito, a fringe far-right party that started off before the election with only one seat in the upper house and now has 14. So it has become now the third largest opposition party in the House of Councillors. And certainly when you look at what analysts are saying here, they argue that whilst Sanseito doesn't really offer any real solutions, and I think it's really important to keep in mind that they run on a platform of conspiracy theories and anti-immigration, but that arguably they've been able to tap into some of the frustrations that some Japanese people feel. Arguably, it could be in relation to the economy in terms of the fact that real wages continues to decline, costs continue to rise. There's this feeling as well that Japan is being left behind, and the yen is a symptom of that in recent years, meaning that, many households feel poorer as well. So what is that going to mean for Japan's politics, its policies, and also for the markets? In terms of the here and now, as you mentioned, Ishiba has said that he wants to continue on, even though he has now lost power in both houses of parliament. And we know many analysts say that his position remains pretty untenable because the result is historic here. So we'll have to see, what happens beyond this, these next few weeks. But today, markets have come back online, and the key risk still remains the bond market and the views here that the LDP and Komeito will have to work with some of these smaller opposition parties to get policies through.
Interesting. Well, you've got to wonder whether populism and nationalism means populist economic policy and fiscal policy too. And this is a global phenomenon. Lin, thank you very much indeed for that. Meanwhile, we've been tracking this story. China is set to build the world's largest hydropower dam on a Tibetan river that flows into India and Bangladesh, fueling fears that it could affect millions downstream. Elaine Yu has more and joins us now. Good morning, Elaine.
Hey, Sri. So the market has cheered this massive dam, which Chinese leaders have touted as the project of the century. And this is a cascade of 5 hydropower stations, and it's part of Beijing's push to reduce carbon emissions and to meet Beijing's climate pledges. But there are environmental concerns as well, and also worries from India and Bangladesh, with the dam being located very close to the border with India. So earlier this year, India's government said it has urged Beijing to ensure that the interests of downstream states were not harmed. And earlier this month, a state chief minister in the Northeast called the project a, quote, existential threat to the region's tribes and livelihoods, depending on sudden water releases. And now India is also moving to build its own giant hydro dam in the region. And that has drawn protests, too, with concerns about villages being submerged and communities being uprooted. And now there are environmental concerns as well, with some analysts warning that the project could threaten the region's biodiversity. And there are engineering risks, too, with the dam sitting on a seismically active region. And also there's a section of the river that plunges about 2,000 meters in just 50 kilometers. So there could be engineering headaches there. And on the environmental concerns, Li Qiang has addressed this, China's premier, saying that special emphasis should, or quote, must be placed on ecological conservation to prevent environmental damages. Sri.
Extraordinary challenges, but this dam is effectively a major economic stimulus as well. What can you tell us, Elaine?
Right. So Citibank said in a note that assuming that it takes 10 years to build this dam, the GDP boost or investment boost could reach 100 billion yuan for a single year. So that translates to about 0.1% of GDP. And the project is also expected to support domestic demand for steel and cement and civil explosives, heavy construction materials. So that could provide some relief as China's property and construction boom sees a slump as well. And the market has cheered this. Notably, the Shanghai-listed Power Construction Corporation surged 10% today. That's on the back of another 10% surge on Monday. So those surges are hitting the upper limit each day. And we look at, this is not the first time China has built a massive dam. And if we look at the Three Gorges Dam, for comparison, it created many jobs, but it also displaced about more than 1 million residents, according to official figures. And residents who were displaced have also complained about the lack of jobs after being relocated and inadequate compensation as well. So, yeah, a lot of countries, especially India, will be watching this very closely.
Absolutely, they will. Elaine, thank you very much indeed for that report. Coming up on the programme, we're still tracking that major breach at Coin DCX and what this means for India's cybersecurity landscape. We'll bring you more analysis with Vivek Raman of Etheralyze coming up next. Welcome back. Counting down to the market open in India, and of course it's going to be the earnings season that's going to determine sentiment and price direction. This is how we are shaping up. If we take a look at futures, GIFT Nifty futures giving us an opening number implied in the region of 25,181. So if that does materialise, we are looking at a lift of about 100 points or so. Dollar rupee exchange rate at 86.256. Let's give you a quick check on cryptocurrencies. And Bitcoin has been backing away from the 120K level. This is where it currently stands, 117,189 and some change over in the US. President Trump, signed the Genius Act bill into law last Friday, which establishes a regulatory framework for the stablecoin market. SEC Chairman Paul Atkins caught up with our US colleagues about the implications of this new legislation. Take a listen.
I think this bill the Genius Act is focused on payment stablecoins. And so that's not really within the SEC's ambit of regulation, but it's really for the banking regulators as is appropriate. But the one great thing about this is that for the first time now, the United States government has put its stamp of approval on a very key and important, potentially very important digital asset that will, I think, help to lower costs, lower risks in the market, because we can now move towards an instantaneous almost settlement of payment versus delivery for securities thanks to on-chain stablecoins. And that will help, I think, innovation and to really get our markets, to be the best in the world.
Staying in the crypto patch, shares of Trump Media jumping 3% overnight after announcing it had accumulated roughly $2 billion in Bitcoin and related assets. That translates to about two-thirds of the company's total liquid assets. The stock jump also helped take Trump's stake in the firm to nearly $2.3 billion. Over the weekend, Indian crypto exchange CoinDCX lost $44 million to cyber theft. The exchange described it as a sophisticated attack targeting one of its internal operational accounts. The hackers stole digital assets, but CoinDCX said no customer funds were affected. This is the second time within a year that CoinDCX has suffered such a hack. Let's get into this and what it means for the broader crypto ecosystem that is evolving in India. Vivek Raman joins us now, CEO and co-founder of Etherealize. He joins us from New York. Vivek, great to have you on the program. So, in your opinion, what is the workaround or solution to cyber theft of the scale that hit CoinDCX? Do we have to look to the regulators, or does the industry need to do a better job of securing their systems and getting their own house in order?
I think it's a little bit of both. So, crypto's a new technology. Blockchains are global infrastructure. They're neutral infrastructure that anyone in the world can use. And we're seeing regulation advance led by the United States, which is very, very encouraging to see. But the more frameworks that are in place, the more responsible innovation can happen. And when you don't have a regulatory framework, that's when it becomes operationally a little bit more risky. So I think we're all trending in the right direction. But as this nascent new infrastructure sector evolves, we are hopefully going to see fewer and fewer hacks like this.
Right. And Vivek, users were not affected, but still users and investors are quite legitimately asking, how safe are our assets after this sophisticated server breach? Is it just CoinDCX within the Indian ecosystem that is vulnerable?
I think there are other exchanges that have more robust regulatory frameworks and have different ways to operate that have been battle tested for longer because of established frameworks. And because of that, I think it might be isolated. That being said, systems are only going to get better. The technology is only going to evolve. We're still very, very early stage. And early stage as the banking sector or the internet sector were evolving, there was a little bit more risk. I see that rapidly maturing, especially with the U.S. leading with stablecoin legislation, which now legitimizes this asset class, as Chairman Atkins said, and allows more institutions to build responsibly.
So if SEBI, the RBI and government urgently need to come together with the industry for a coordinated response and set up the right and a sound regulatory framework governing digital assets, is stablecoin a step in the right direction, Vivek? And does India need the equivalent of a Genius Act?
I absolutely think so. So the point of blockchains, of programmable blockchains, is to be able to take all assets tokenize them, and then represent them digitally in the digital universe. So it increases commerce, reduces settlement times, reduces settlement costs, increases transparency. It's a net benefit for the entire global economy. The first step towards tokenizing all assets is tokenizing the currency of payment. So stablecoins are that currency of payment, and by bringing dollars and rupees and global currencies on chain, it allows for the payment side, which will allow for the rest of the world to be tokenized. So absolutely, the Genius Act was the first monumental step. I expect a lot of other Genius Acts globally, and I hope India does one too.
And Vivek, when you talk to your colleagues in the industry in India, when you talk to policymakers, as I'm sure you do you feel that the Indian regulators are ahead of the crypto curve? Are they lamentably behind it? And what then must they do to ensure the policy guardrails are fit for purpose? Or do you feel that the bad actors will always be one step ahead?
I don't feel like the bad actors will always be one step ahead. I think that India is an innovation hub, just like U.S. is an innovation hub, and a lot of the great entrepreneurs were made in India. So India's embraced internet. India is very, very technologically advanced. I saw even a couple months ago testified in front of Congress on the Clarity Act, which was the bill that's in place after the Genius Act, and saw the willingness of regulators to say, it's time to have responsible rules of the road and innovative adoption for the U.S. to embrace this technology and to be a leader. And I have no doubt that India will do the same.
Just back to India, there's a 30% flat tax on cryptos in the country. Is that fair, or do you think it should be more lenient for the industry to flourish?
I think digital assets are like property. Digital assets, many of them are commodities, and digital assets should be treated on a similar footing as commodities or property. And once you have that kind of framework and you start to notice that a lot of the world will be digital, so ownership will be digital, and a lot of infrastructure will be digital, then as long as the tax treatment is fair and the same, I think these industries can all flourish. There's too many, it's too positive sum of a game. A public blockchain like Ethereum allows for an entire new economy to be created globally, allows new jobs to be created, allows new applications to be created. There's plenty of tax revenue to capture from that, and it's still positive sum because it creates new innovation.
And once again, in terms of adoption and participation amongst investors, does India need a Bitcoin ETF approval moment? Does it need more institutional investors to really come to the table?
I think institutions are a large part of it. I think that crypto is universal, blockchains are universal, and we want as much retail adoption as possible. Blockchains give access to financial products and financial assets that typically aren't available to retail investors. So that's a wonderful thing. They're global distribution vehicles. That being said, without institutions coming on chain, tokenizing their assets, and entrusting neutral blockchain infrastructure like Ethereum to do their financial transactions and with their assets, you're not going to see the ultimate potential be achieved. So yes, we absolutely do need precedent. We need things like Bitcoin and Ethereum ETFs. We need rules of the road for decentralized finance and for tokenizations, and we need stablecoin legislation. With that, I think the pieces will be in place to really let responsible innovation happen without missteps like hacks.
And Vivek, what does the industry need to do to be fit for purpose? CoinDCX is offering a white hat bounty of up to 25% from a pool of $11 million to anyone who helps recover any amount of that $44 million that was lost to hackers. That's all very well, but it's not really addressing the inherent shortcomings of the security architecture. What do they have to do to really tighten up some of the loops in what appears to be quite a porous system?
It's a new system, and it's a system that requires new sets of both regulations, but also operational security. the whole world is changing. I mean, even with things like AI, the potential to have fraud and fakes from AI is very, very high. So it's not just crypto. We're now I mean, even in just this decade so far, we've had two massive new innovations. One is AI and one is the ChatGPT moment for crypto and blockchains itself. Both are happening at the same time. So I think security and being careful needs to upgrade in a meaningful way. That will happen. Regulations will help that too.
And the challenge, I suppose, for the entire architecture and the system is that AI can be used to defend and to attack. And Vivek, how is the industry getting their threading that needle and getting their head around that one?
Well, the ironic and sort of beautiful part is public, open, transparent blockchains like Ethereum are actually perfect complements to AI because blockchains allow for authenticity. Blockchains allow for traceability. Blockchains allow for unique identifiers, so you can't have deep fakes and double spends. And so it's actually quite, it seems like science fiction, but it's coming true. The blockchains are the perfect complement to AI. So I think having responsible frameworks for AI innovation is happening very, very rapidly. We're now going to very quickly have responsible frameworks for crypto innovation, and both these technologies are going to marry together and actually help each other thrive in a careful, responsible manner.
Vivek, very finally, when you look across the region, when you look across Asia-Pac, who do you think is getting it right from a regulatory point of view? Who's striking the right balance between letting innovation flourish and safeguarding the system?
Singapore has been a really, really interesting leader in this space. Singaporean institutions, Singaporean banks have done tremendous amount of innovative pilots and tests, and they've utilized public blockchains. Not I think a lot of the world's used private permission blockchains as test environments, but that's like using individual intranets instead of plugging into the actual internet. So we've been in this intranet trial period for the last decade, since basically the first and most established smart contract blockchain, Ethereum, was established. But you're seeing governments like Singapore that have experimented on public blockchains, that have deployed tokenized assets, that have rules of the road. So that's one example of a hub. I think there'll be many, many more.
Vivek, excellent conversation. Thank you very much indeed for your insights. Vivek Raman there from Etherealize. Now, we are counting down to the market open in Mumbai. We're back in 2 minutes with those trades. Welcome back. Indian markets are just coming online. This is what the Nifty 50, the benchmark, is doing right now. 25,145. We're up by just a fractional 0.2%. Earnings are going to inform the price action today, of course. Let's give you the exchange rate, dollar rupee at 86.27. Earnings season in full swing. Let's take a look at shares of Eternal. This is what they are doing. Shares rose over 5% yesterday after the online delivery firm posted a 70% surge in quarterly revenue from a year ago. The stock up by almost 10%. Company's popular food delivery business Zomato remains its profitable arm and its biggest revenue generator, but its quick commerce arm Blinkit is closing that gap fast as India's quick commerce landscape continues to grow more competitive. Meanwhile, shares of Ultratech Cement are looking like this, up by just a fraction. India's largest cement maker beat analyst estimates for the first quarter thanks to high cement prices. Standalone net profit gained 48% year over year. CFO said the company expects cement prices to continue rising this month despite unfavourable weather and heavy monsoons. Now, JSW Steel reported stronger than expected Q1 profit as raw material costs ease. Despite the profit beat, the company did flag concerns over rising low-cost steel imports from countries like China and Russia. Although steel prices in India improved quarter on quarter, they remained below last year's levels. JSW Steel CEO called on the government to extend and increase the current 12% safeguard duty, warning that cheaper imports are weighing on industry sentiment. With that, let's get deeper into the results at JSW Steel. Jayant Acharya, Joint Managing Director and CEO of JSW Steel, joins me now. Sir, thank you very much for your time and welcome to the programme. Can we start with the domestic fundamentals? Consumption grew 7.9% last quarter. Do you think you will equal or even surpass that pace in future quarters, or should we expect some moderation?
So, Sri, in the last 3 years, if you have seen the domestic growth, I think the domestic steel demand has been very healthy in double-digit numbers. The year gone by, we increased incremental 16 million tons of consumption to reach 152 million tons. Our expectation is that we would be growing by about 8 to 9% in this year. The government capex, which is one of the primary drivers of steel consumption, has done quite well in April and May, and I think they are on track to achieve the budgeted targets. The manufacturing side is also doing well. The capacity utilizations have improved. The rural economy is picking up. The urban, which was slightly behind, is now starting to inch up. So overall, we are quite positive about the Indian economy growing well, and therefore the steel consumption growing well.
How challenging, though, is the global steel market, given President Trump's sectoral tariffs have not spared steel, and India has responded with safeguard duties of its own?
So yes, you're right. The global landscape on tariffs have been uncertain and volatile. From this year, I think April onwards, the tariffs which have been announced in various parts of the world have been creating an uncertainty, and therefore the trade flows are getting diverted. We find China's exports increasing over a last year high level of export as well. China is currently exporting about 10 million tons a month, while their production has moderated. But I think the level of export continues to be a challenge. We would watch out for any kind of dumping of steel into India. The government has proactively taken steps to put the safeguard in, and that has helped the Indian steel industry. We will have to see that no dumping takes place because of diversion of trade flows into India.
Jayant, how confident are you that government will respond favourably to your request to extend and increase the safeguard duties beyond the current 12%?
I think we are hopeful that the government will take steps as required. They have done that in the past as well. The protectionist environment which you see in the world, most of the countries raising tariff barriers, is forcing people to relook at the overall international market. We are quite hopeful because India needs to be self-reliant for steel, very important for a structurally growing country as ours. So we are therefore quite hopeful that the government will take proactively decisions in this regard.
Understood. Jayant, on the operational side, coking coal prices, they did moderate. So on the whole, were cost pressures less challenging last quarter? And do you think that those costs will continue to moderate?
So on the coking coal side, we had a tailwind. The prices went down, and we had a $14 benefit in the last quarter. We see, the prices of coking coal have, I think, more or less stabilized. We see maybe up to $5 benefit coming in quarter two as well on improved blend mix into the coke ovens. Having said that, I think we have taken a lot of initiatives on the structural side to reduce our costs. Our new operations in Vijayanagar of a new 5 million ton, which has come up, has been ramping up well. The costs are coming down. The second converter is now likely to start operation, and that will again reduce the cost profile. We have taken steps to increase our renewable energy in our mix. We have now close to 800 megawatts operational. Another 200 megawatts could go operational in this quarter. So we'll have 1 gigawatt of renewable energy in our mix, which is at a lower cost point. Steps like this, like the pipe conveyor, we are putting up a slurry pipeline. These are all initiatives taken to reduce cost. So that will stand us in good stead.
And there's clearly an associated positive impact on margins, rising to 17.6% last quarter from 12.8% prior. Can you maintain or better that performance?
It's difficult to comment on the margin, but I think what I would like to highlight is that we see the Indian steel demand remaining strong, and therefore we have the capacity now to be able to meet that growing steel demand. We are well placed to do that. So volumes will improve. Our cost positioning, the cost will go down, and I think that would support any kind of realization drop which may happen. So we remain optimistic in this year with respect to doing better than the last year. Difficult to put a margin percentage in terms of expectation.
Jayant, why, though, did net debt rise in the quarter, and to what degree does that impair the balance sheet at JSW Steel?
So actually, Sri, if you see our numbers, while the debt has risen by about 3,000 odd crores, our ratios of net debt to EBITDA have improved. The debt has risen because of a working capital increase, which we have proactively taken for some of our new operations which have come up, and also to rebuild some of the inventories which were reduced towards the end of the last year. We would be able to moderate these inventories as we go into this year progressively. We focus on the ratios, and we are quite confident that these ratios we will look at in a prudent manner and keep improving them progressively in this financial year.
And Jayant, on to Bhushan Power and Steel. Can you clarify where you stand there, and how confident are you that you can convince the court that you have turned around BPSL, it's financially viable and profitable, and you can then go ahead and complete this acquisition?
Yes, so we, our performance in BPSL post our acquisitions, I think is self-reflective. The company has turned around. We have increased capacities, and it's doing well. The Honorable Supreme Court has taken a judgment, and we have filed a review petition. The Committee of Lenders and the resolution professionals have also filed separate review petitions. We believe we have strong grounds to pursue this review petition, and we are looking forward to the listing date to take the discussions forward.
Thank you for that, Jayant. Finally, JSW Steel shares have risen some 16% year to date. What do you say to the analysts who say the stock perhaps is fully priced, or is there momentum to take your stock to 1,200?
So just to give you a little bit of history, over the last 20 years, we have increased our capacity by 15%. We have increased our capacity, we have increased our EBITDA by 23%. And the total shareholder returns over the last 2 decades has been 28%. So I think we have proved that we are able to give good returns on any investments to the shareholders, and we would continue to do that. We are a growth company in a growing market, and therefore I feel we are well placed to take advantage of this market.
Jayant, we'll leave it there. So always a pleasure catching up with you after your earnings. Jayant Acharya there from JSW Steel. Thank you. That brings us to a close on this Tuesday edition of Inside India. Do keep watching CNBC. Dan Murphy is up next with Access Middle East. Have a good day.